Hi folks, David Waring here again with InformedTrades.com and today's lesson of the day. In our last lesson we looked at the rising and falling wedge chart patterns, two patterns which can be considered either reversal or continuation patterns depending on how they show up on the chart and whether they occur in an uptrend or a downtrend. In today's lesson we're going to look at strategies for trading these patterns, complete with entry and exit points. So let's get started.
Okay, so we're going to start this one by looking at the falling wedge reversal strategy. If you remember from our last lesson, when a falling wedge appears in a downtrend, it's considered a reversal pattern. As this is the case, we're going to look for buying opportunities, and basically the buy signal that we're going to look for is, or traders commonly look for, is a break of the upper resistance line. They then take their target or calculate their target price by taking the high of the pattern and subtracting the low or lowest point on the pattern from that high, and then projecting that level or that number up from the break point of the pattern, and that's their target. And then they place a stop just below the lower support line or just outside the pattern. So let's take a look here. So here's our chart of the dollar index. We see our falling wedge pattern that we looked at from the last lesson. Here's the break. So we're going to look to get long there. Traders commonly look to get long there. There's our high point, 82.50. Our low point, 74.50. We subtract. We get 700 points. We project that 700 points upward from the break point to get our target. And then we place the stop loss just below the bottom support line there, or just outside of the pattern. Okay, so pretty basic. Falling wedge continuation pattern. If you remember, when a falling wedge appears in an uptrend, it is considered a continuation pattern. So again here, traders are going to look to get long on the break. We have our falling wedge, we have the break, and then the strategy is exactly the same. You take the high minus the low, that's your target, trade that up from the break point, and then stop loss just below the bottom support line. Okay. If you remember, the rising wedge, when that appears in a downtrend, that is considered a continuation pattern. Okay. So traders are going to look to get short to position for a continuation of the downtrend on the small correction that forms the rising wedge in a downtrend. So that's what we have here. We've got our rising wedge, we've got our break, and then the strategy is basically the same. We're looking to trade short there on the break. We're looking to calculate our target by taking the high, 510, minus the low, 475, which gives us 35 points, which we're projecting downward for our short target, 35 points from the break, and then stop loss just above the top resistance line or just outside the pattern. Strategy is just the same for the rising wedge reversal. If you remember, if you see a rising wedge in an uptrend, it's an indication of a reversal of that uptrend. So again here we're looking to get short. There's our pattern. We're looking to get short on the break. We are taking the high minus the low. That's giving us our 300-point target, which is then projected downward from the break point. And then stop loss is placed just above that resistance line. Okay, two additional things that you should note here that traders will also look for. Number one is traders like to see declining volume in all of these patterns as the pattern matures. So declining volume going into the break, and then rising volume on the break is a good sign for all of these patterns, and traders will often use those things for additional confirmation. Secondly, the length or duration of the pattern, so the length of time it takes for the pattern to form, is a good indication that traders will often use for determining how long they anticipate the market is going to take to reach their target price. So just two more things to keep in mind there. All right. So that's our lesson for today. In tomorrow's lesson, we're going to look at two more continuation patterns, which are known as the flag and pennant strategies or patterns. and then a strategy for trading each of those and the lesson that follows that. So we hope to see you in those lessons. As always, if you have any questions or comments, please feel free to leave them in the comments section below. And have a great day.